This is a podcast from the Business Times.
Donald Trump is exceedingly pro-crypto. And he basically stated that if he gets elected, he's going to put Bitcoin into the US Treasury, strategic reserve. And can you just imagine what will happen when that happens? Every other country will be forced to follow suit.
In recent times, there's been fresh investor interest in digital assets. How come? Feels like a reversal of fortunes for the embattled space. Large banks have been competing to launch crypto trading desks, while wealth management firms come up with more and more products and funds that are crypto-related. What's happening? Helping us out today is Kunal Chowdhry, CEO of Apollo Singapore Investments. And if you have feedback or an episode idea, please get in touch, btpodcasts@sph.com.sg. So what do you say, Kunal? Seems like you're quite bullish on crypto as well.
For the last couple of years, I think, frankly, ever since, we were all stuck in lockdowns during COVID, I had some time to start looking at Bitcoin and other cryptocurrencies and digital assets. I'm one of those people who doesn't invest in things if I don't understand them. And the more time I spent reading about digital assets, the more I found it interesting. And I sort of went down the rabbit hole of this space about 3-4 years ago, and I haven't come up for air. I'm continuing to burrow down the rabbit hole. It's got to the stage now where we actually incorporate digital assets into our investment portfolio, although it's a small percentage, because at the end of the day, it's still a very risky, volatile asset class. But I do believe that it does have a place in most sophisticated investors' portfolios.
So therein lies the catch, right? You said sophisticated investor. So one really needs to be as into it as you are if they want to navigate this space. Because sometime early last year, it was all about this space. Yeah. People were just talking about Web3 and DeFi and cryptocurrencies. And then, of course, everyone had their eye on Bitcoin jumping up and down all over the place, giving people whiplash. What's happened since?
I think what ended up happening is after the FTX collapse, a lot of people got burned. And crypto is one of those industries where, regulation isn't standardized across the globe. And in the absence of regulation to some extent, you do have bad actors. And a lot of people got caught out by those bad actors. We had 3AC, a Singapore-based hedge fund which blew up, Celsius in the US, and many other crypto companies, in effect, sort of going bankrupt. And a lot of people losing their money burns a huge hole in not only their pockets, but in the public's perception. All these blow-ups coincided with significant changes in the macroeconomic state of the world. Probably early 2023, towards the end of 22, the Federal Reserve started increasing interest rates. And I think what all of us forget is one of the main reasons why crypto really took off in 2020, 2021 was because we were all in the middle of COVID lockdowns. And governments across the world had given checks to their citizens as some sort of compensation. And with people being stuck at home, a lot of them decided to put money into crypto. And a lot of them did well out of it until they didn't. The scandals towards the end of 2022, coupled with the fact that suddenly, the money printers across the world were turned off. This, frankly, was a problem for crypto as an industry because a lot of people who are new to crypto drank the Kool-Aid, which was that, this is a completely different asset class. It's not linked to anything else, Bitcoin all the way. But unfortunately, this is an asset class that hasn't matured yet. Everything is linked to the performance of the US economy. And so when interest rates started going up in the US, when inflation started getting high, liquidity was turned off across the world and Bitcoin followed suit. Shortly after FTX crashed all the way down to 16,000. And a year before that, it was at 64,000. A lot of people started saying, maybe this isn't for me. Given the fact that crypto is so volatile, I think you need to be able to accept that level of volatility. So, before I started looking at crypto, I was one of those people who literally start crying if my portfolio fell 2% overnight. But with crypto, if it falls 2%, you say, yeah, whatever. I mean, if it falls 20%, you need to say, yeah, whatever. It's going to go back up eventually. And you need to be used to that level of volatility.
All right, you've said so many things that we need to try and unpack. One, that the digital asset space still feels a bit like the wild, wild west. Yeah. Two, you really need to know your stuff or have the stomach for it. If you want to stay in this space. And then also you talked about how it ties to the American economy and interest rates. So we are at a place where the interest rates are going to come down. So is that why maybe we are starting to talk about investing in digital assets again?
I think you're right. But I think the real game changer earlier this year was the launch of the Bitcoin spot ETFs in the US. This has been on the cards for many years. And when the SEC finally approved, it sort of made it very clear that, guess what? Institutions are finally buying crypto. And that wasn't the case in previous cycles. It was very much retail driven. But now, you've got all the top fund managers of the world, BlackRock, Fidelity, all of them offering spot Bitcoin ETFs. And that means now that, yes, institutions are buying this asset class. And by doing that, you're sort of legitimizing the space. For example, both Goldman Sachs and Morgan Stanley have declared substantial Bitcoin ETF holdings. One of Europe's largest hedge funds declared that they owned $500 million of Bitcoin. And the Ethereum spot ETF was also approved in July in the United States as well, which means institutions can now buy Ethereum as well. Earlier on, hedge funds, pension funds, and, a lot of institutional investors in the US in particular were not allowed to buy Bitcoin directly from exchanges due to a number of reasons.
Here's the thing, though. When it comes to institutional investors, for retail investors, you want to sort of be ahead of them, if you will. That's the only way you can get the opportunistic acquisitions, because once them deep pocket fellas get in there, there's no chance for the retail investor.
Well, I also believe that the rising tide lifts all boats. So my perspective is that, if retail has vanished from this space and institutions have taken their place, what it sort of does is it sort of sets a floor for these assets. About 2 years ago, people were worried that Bitcoin would go to zero after the FTX collapsed. Now with BlackRock and Fidelity and all the, as you say, the big boys in this space, they're not going to let that happen. Bitcoin, sure, right now is struggling. But if we had this call a year ago, it would be a very different conversation. The mood would be much more optimistic than it is right now. The coming of institutions into the space has been a huge catalyst for the adoption of crypto, at least for Bitcoin and Ethereum. And once interest rates start going down, we will see more interest in crypto because suddenly people will have more liquidity to play around with. And people then tend to allocate to more risky asset classes, and crypto sort of qualifies.
That's it. That's all you're basing this on?
And one other thing we do have coming up is the FTX refunds are coming through. Whoever invested in FTX is not getting zero back. They'll probably get back at least 50% of what they invested. Anecdotally, I believe we should see close to $16 to $20 billion coming back into the crypto ecosystem sometime within the next quarter or two. So putting all of that together, I am pretty optimistic over the next 6 to 12 months.
And you think even though people have been burned before, they're still going to head back into this? And is it just crypto? What about other digital assets?
What people are probably going to do is that they're not going to invest in Kunal coin and Howie coin anymore. They'll probably stay away from speculation. Meme coin culture, all of these tokens, which seem to come up every day, are actually hurting the ecosystem because, they reach crazy valuations and then there's some fraud behind the scenes and they crash to zero. And it's pure gambling. It's pure speculation. Retail, if it comes back at all, will probably buy Bitcoin, Ethereum, maybe a bit of Solana, which is probably the most well-known of the alternative crypto tokens, and should probably stay away from everything else because everything else is pretty much, as you've pointed out already, sort of like the Wild Wild West. And you're up against really smart players who've been in the space a long time. As a retail investor, if you enter into one of these other crypto assets, you already exit liquidity. So I would stay well clear of anything outside the top 4 or 5 if you are serious about being in the space.
Tell us about the top 4 or 5.
Have to be obviously Bitcoin. Then you have Ethereum. Then, Solana. You have BNB, the native governance token on Binance. And Binance is still such a large player in this space. And I would just stick to those, frankly. But if you invest in Bitcoin, Ethereum, it's not going to go to zero. A floor will be set. And that's purely because institutions have now bought into this.
Look at that. My risk-averse self has stopped sweating. More with Kunal Chowdhry about the possible rise of digital asset investing in a moment.
If you've been a fan of the podcast Mark to Market, Wealth BT and Property BT, they are moving to a new listing, BT Correspondence. Look for episodes every Tuesday from October. All the insights and analysis and market trends, property, wealth, and soon mobility too. Powered by the Business Times journalism of Genevieve Kwa, Leslie Yee, Ben Paul, and Darren Wong. Because great reads should be heard. the BT Correspondence channel. Find BT Correspondence wherever you listen to podcasts.
And now, back to Money Hacks from the Business Times.
You have people like Larry Fink, the most famous money manager on the planet, saying it's digital gold, that every sophisticated investor should have a certain percentage of their portfolio in Bitcoin.
We're speaking to Kunal Chowdhry from Apollo Singapore Investments about digital assets rearing their profitable heads again. So talk to us about all this other stuff, the NFTs. I mean, there's some kind of monkey.
What about DeFi we mentioned a while ago and Web3 and such? Or is it just a rose by any other name? All of this comes under...
I think all of this comes under the general heading of Web3. And these are terms which are bandied about every couple of years, and everyone thinks that it means something more than what it actually is. At the end of the day, Web3 basically means you're giving control of content to the users in a way. It's underpinned by ideas of decentralization and tokenization. And, the whole idea is very utopian in a way, that suddenly these big corporations will hand over control of everything to the users. And I don't think the Apples and Googles of the world are just going to roll over and let their users and other people, make all the money and willingly give it up. It's a bit foolish to think so. But I do believe that at the end of the day, there is huge potential for decentralization. That's sort of what users are going after when they look at Web3. They look at the underlying technology, which is blockchain technology, distributed ledgers. So a lot of these are buzzwords. I agree with you. But I think over time, there is definitely a drive towards decentralization and towards using the underlying blockchain technology. And that's what is actually most interesting about crypto. There are many other applications of blockchain which are used in more traditional industries as well. That's why as an investor, sometimes you need to separate the two. You need to separate the underlying technology and the application, which in this case is crypto.
Let's talk about regulation. Anything you see coming up that might affect the investment outlook for this space in the next, say, 1824?
I think a lot of it is driven by the United States at the end of the day. You talked about NFTs a little while ago. From a regulatory perspective, OpenSea, which is the largest NFT marketplace in the US, was recently sued by the SEC. The SEC is alleging that NFTs are sort of like securities, which is a bit preposterous. But this is sort of symptomatic of the times where you have an administration in the United States which is incredibly anti-crypto. The SEC spent the last several years going after every single crypto company they can think of, and they've basically lost every single lawsuit in the US courts. So it's been a very unsuccessful persecution of crypto. And it got to the extent where crypto companies who wanted to open bank accounts, the banks were sort of told behind the scenes, don't do it. So there's been, a huge drive in the US, at least, to sort of kill the industry, which has upset a lot of players in the United States, because this is innovation. This is a legitimate asset class. And frankly, if investors are willing to invest in it, at least the accredited ones, of course, I agree that regulation is important to protect investors. I think that's critical. You need to have some regulation in place which increases transparency. You need results to be declared. You need to make sure things like FTX don't happen again. People also forget that FTX wasn't crypto fraud.
Then what?
It was old-fashioned stealing, which has happened many, many times in many companies over years, decades, and centuries, where you have a shady CEO who takes customer money and uses it to, finance his villas in the Bahamas. It's just that it just got caught up in all the other scandals at the time, and so it was viewed as, crypto fraud. And was any regulation that could have prevented that from happening? Maybe not, right? Because if you have a CEO and an entire management team which is doing illegal stuff, it's really tough to get around that, right? Maybe if it was a publicly listed company, then their disclosures would be scrutinized more carefully, but it wasn't.
So basically, in or out, you reckon, Kunal, when it comes to this space?
I'm in 100%. I believe in this space. I do believe there are clear use cases for certain cryptos, not everything. There's no use case for Kunal Coin at all, apart from being a purely speculative investment. But 100%, right? It's digital gold. You have people like Larry Fink, the most famous money manager on the planet, saying it's digital gold, that every sophisticated investor should have a certain percentage of their portfolio in Bitcoin. And now they offer...
What percentage?
I think that depends on your risk tolerance. I would say, personally speaking, up to 5% is reasonable. But I'm bullish on this space. And a lot of family offices tend to be very conservative. They'd much prefer to buy real estate. We can actually go and touch the building. Oh yeah, I own this. Things like crypto are intangible. You can't touch them. You can't feel them. And you don't always understand them, which makes it difficult for certain types of investors to invest in this space. But all I will say is that if BlackRock is selling you this asset class in the form of an ETF, obviously they believe in the underlying asset. It's no different to buying any other ETF. What's wrong with putting a certain percentage of your portfolio into it? I'm not saying buy all the other alternatives, which I think are incredibly risky. But if you're a reasonably sophisticated investor, what can go wrong by putting 2-3% of your net worth in Bitcoin? I mean, you have some people who believe it's going to hit $1 million in 5 years. But hey, if we had this call 10 years ago, and at which point Bitcoin was $3, and I said, I guess it was only $59,000 in 10 years, I'd have been laughed out of the room as well, right? Anything is possible. And, you talked about regulation earlier. Donald Trump is exceedingly pro-crypto. And he basically stated that if he gets elected, he's going to put Bitcoin into the US Treasury, strategic reserve. And can you just imagine what will happen when that happens? Every other country will be forced to follow suit. So, keeping politics aside, you have one candidate who has a 50% chance of winning the election, who's basically said that he supports this space wholeheartedly and is going to put Bitcoin into the US Treasury alongside the US dollar. It's pretty powerful as an argument.
I wish we had more time, Kunal. I'm not sure that was the best argument for the case of Bitcoin.
It's just an example, but
Thank you so much for your insights today.
Not at all. Thank you for having me.
Kunal Chowdhry, CEO of Apollo Singapore Investments. And if you have feedback or an episode idea, please get in touch. btpodcasts@sph.com.sg.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.